Hey future Forex traders, thinking about jumping into the Forex market to make a bigger profits? Hold up. If you don't master these critical skills first, you are setting yourself up for failure. In this video, I'm going to break down the must-have skills every Forex trader needs to succeed. So stick around to avoid costly mistakes and start trading like a pro. So now let's dive into the 3 key skills every Forex trader must master before starting to trade. So first is technical analysis. You can't trade Forex without understanding charts. So learn to read candlestick charts, chart patterns, for example, support and resistance levels. You know, always when the market reaches the support or resistance level, you have to know that yes, it is time for buying or it is time for selling. For example, when it reaches this resistance level or this support level here, so you have to know that yes, here it is a selling opportunity or it is a buying opportunity when it reaches a support level or a resistance level. Also, you have to you can use also indicators like RSI or moving average. For example, there are some moving averages. For example, the one of 20 exponential moving average and the 50 exponential moving average. And also you can add the one of 200 exponential moving average to give you the direction of the market. Put a double top pattern or a double bottom pattern. Okay, so now for example here the market was in the bullish trend. When it reached right here, you can see that when it reached right here, it made a double top. Okay, so now this was the first top right here, and also this is the second top right here. So now when it makes the two tops, of course, we must have what we call a neckline, as you can see here. And when it breaks this neckline, of course, the market goes back, then it makes a sell. Okay, that is a double top. Also for the double bottom, it will make two bottoms. Okay, the first one and the second one. Then it breaks the neckline. Yes, after breaking the neckline, of course, it will always buy. You can spot a market structure shift. Okay, so also market structure shift, or what we call a change of character, can help you to spot a market change. Okay, so now for example, when your market is moving in a bearish trend, let's say this is your bearish market. Okay, it is breaking lower highs and lower lows. So that is a lower high, this is a lower low, lower high, lower low. So there's a time it will reach here and it breaks the previous low. Okay, so when it breaks, it will come back to either a zone, for example, order block, or in a fair value gap, then it buys again. Okay, so now this lower low, when it always breaks this lower low right here, we call it a market structure shift, or you can call it a change of character. So always you can spot those technical analysis patterns. So now number 2, we shall look at risk management. Risk management, this is the golden rule of trading. Never risk more than 1 to 2% of your account on a single trade. For example, you might be trading a small account of like 1,000 USD, or maybe you might be trading the one those ones who trade prop firms, like you trade a prop firm of 15k or 20k or maybe 100k. Always there are some rules there. They'll tell you not to risk more than 1% of the account or 2% of the account. Okay, so now let's say you have your $100. Sorry, you have, let's say you have like $1,000. Okay, when you have your $1,000, of course, they'll tell you not to risk more than 2%. So that means here on the $1,000, you should not risk more than $10. Okay, so that you always protect your capital. In that, when the market goes against you, you will only lose maybe $10 on a 1k USD account. Okay, so now always use stop loss orders to calculate this. You can use some. There are some websites that actually do that you can use to calculate your stop loss orders according to the pair you're trading. Always use a stop loss. Okay, don't allow the market to go in the drawdown. Like don't allow. You have to always position your sizes based on your risk tolerance. For example, now when your risk tolerance is for example, when you are trading a small account of $100, you cannot say I'm going to risk half of the account. You cannot risk 50 USD, because you will not sustain that risk. Okay, so that means you have to risk what you will afford. to lose. We shall see it in emotional discipline. Okay, so now always one bad trade can wipe you out when you say that no, today I'm not going to put a stop loss. Yes, when you're lucky, you can not put a stop loss, then the market goes in your direction. By the time you will not put a stop loss, that's the time the market won't go in your direction. Okay, now for example, this is a market structure shift. The market came here, it made this low, it broke it, what we call liquidity. That means these early buyers, they are liquidated down here, and even the sellers, they are liquidated here. So that means this one became a protected low. Then here, always someone can enter buy position from here. Then what we call by setting a stop loss, it is here. You can use this risk to reward ratio. Okay, so now you always put a stop loss. You can, for example, this is a 3%. That means I'm risking 0.3% when I'm targeting almost 3% of the account. Okay, for example, now when you're having a $100, let me say that one is a small account, so you can decide to to risk. For example, you can decide to risk like $5 when you are aiming for almost $300 when it goes in your direction. This is GBP USD. It is not a volatile pair. Okay, it's not so volatile. You cannot risk this on gold. Sometimes gold will wipe your account. Okay, yes. So now the last one is what we call emotional discipline. So now this one, trading is a mental game. It is almost 80% psychology. So now psychology will always undergo this emotional discipline. Okay, so now fear and greed can ruin your strategy. By the way, you might be having a strategy that even everyone talks about it, it is working almost 80%. But when your psychology or mental health is bad, it can ruin your strategy. Okay, so now that means master staying calm during losses and avoiding overconfidence after wins. Okay, so you have to stick to your trading. For example, now we said I've entered from here. Okay, I've entered from here. Now there are some people, yes, sometimes the market can come because now this is your strategy. When the market breaks here, it comes back, I enter. Now what if the market comes and doesn't respect this and just goes down? Okay, you might find some people, they will always not put a stop loss and they wait for the market to go. So they be there waiting that yes, it will come back, it will come back. Now what if it doesn't come back? Okay, that's what we call overconfidence. You are overconfident about the strategy, but yet every strategy, it is having losses and it's having days that it will give you losses. Okay, it is not 100% correct. Okay, so that means you have to always avoid overconfidence in your trades, and when you win, you have to take it as a lesson. Okay, so now the bonus tip is trading strategy development. Always you need a system, whether it is scalping, it is day trading, or swing trading. So for scalpers, you can always use your smaller time frames. For example, you can use your 1 minute time frame, 2 minute or 5 minute time frame for scalpers, and always you enter the market in less than 5 minutes. You exit. You always target some few pips. You always target like 20 to 10 pips. Then you can also be a day trader. For you always focus on 1 hour time frame. Always you exit the trades before the day ends, and also you can decide to be a swing trader. So you hold your trades for days. You can decide to enter a trade and you hold it for days, maybe for like even weeks or months. So it's up to you to choose which trading strategy development you need to develop. Okay, so don't jump into Forex blindly. So you always have to master these skills first, and you'll be miles ahead of most traders. So if you found this video helpful, smash that like button, subscribe, and hit the bell for more trading tips. Drop a comment below which skill are you working on first.